Rayming used to play poker professionally, earning up to six figures. I don't know why he's still here with me right now. But he's taken all of that learning to use it as a foundation for understanding investing and also understanding stocks. So today, we're going to hear about his 2023 investment portfolio and all his investing decisions he's been making recently. Click subscribe to stay updated to more videos on investing. Welcome to the channel.
Hi Daren, thanks for having me. Hi everyone.
Can you please tell us about your journey from professional poker player to investor?
I think it was quite a natural progression. So I was playing, for context, I was playing online poker when I was in university. Made a bit of money there, and that probably led me to investing also. Didn't know what to do with the money. So I had to learn how to invest. Yeah, so that was a natural progression. And I think there's a lot of similarities between poker and investing. And that probably helped me a bit on the psychological side. So for example, one similarity is like risk management. Like you never go all in on like one bet, right? And also like poker, you need to make decisions with limited data. Sometimes you don't have all the information, and sometimes the information might change along the way. Same for investing. Sometimes the thesis might change, the fundamentals might improve or deprove, and then you need to adjust your outcome accordingly. Yeah. So these are some of the similarities, I would say.
So there are some similarities. What do you see as the biggest difference between both?
Biggest difference, right, is in poker you have more control over the outcome. That means, like, for example, in investing, after I put my money into, let's say, Tesla, I need to wait for the thesis to play out. I cannot ask Mr. Market to, hey, you hurry up, but in poker, you want to make more money, you can play more hours. So you are simply it's like a per hour kind of payout. So you're making like $100 as an example per hour. Then you want to make more money, you just play 2 more hours every day, then you get more money. But in investing, you cannot. Yeah, there's one difference. Another difference is, I think, in investing, there's a bit of compounding, a bit of leverage on money. For example, if your portfolio is big enough, right? Sometimes the money, as it compound, even a 10% on a 1 million portfolio is 100,000 a year.
Yeah.
Yeah. Whereas poker is more of a active income. Yeah, I need to be playing. If I'm sick and I don't play tonight, then I don't have money. But in investing, even if I'm sick, lying on my bed resting, uh, Elon Musk is still working for me. Yeah.
So that's a good distinction. With poker, you're still working for the money. With investing, our hope is the money works for us, as long as we're not losing too much money. Right?
Yeah.
So that's it. We think about investors, you see people like Rayming and I. But this stereotype, people who play poker professionally look quite cool and they wear shades and all of that. True or false?
From an insider perspective, actually people wear shades or that is so that you don't see the eye movement and all that. So it's like a poker tell. For me, because I play mostly online,
Yeah.
so it's like my own bedroom, I'm looking at the screen and all that. It's more similar to, let's say, trading than playing live poker. Yeah. So there's a lot of stereotypes about poker, especially in Asia context. And also the terminology, because like poker is a very generic term. Chinese New Year, everyone plays poker. But there's different kind of poker games also. So the specific game that I play is like Texas Hold'em. Yeah, it's a form of game that the house don't play, that means the casinos you can play. So in the long run, if your poker skill is better than mine, you will win in the long run.
Right.
Yeah, so it's like a bit like playing chess. If
Okay.
like your chess skill is better than mine, across 10 matches, you might win 7, I might win 3.
Yeah.
Yeah, in the long run, you will win, right? Yeah, same. So poker is similar to chess, just that there's element of luck involved. Yeah, so the element of luck, people say, but then hey, if there's luck involved, then it's gambling, right? So luck, right? For example, if I flip a coin once, it could be head or tail, then there's luck. But if I flip a coin over a billion sample size, a large enough sample size, the deviation will be about like 500,000 heads, 500,000 tail. So you will be roughly even out. So
Yeah.
that means you take luck out of the equation. The number of times you get good cards versus the number of times you get bad cards is quite even over a bigger sample size. But if you're playing over, let's say, a 2-day Chinese New Year, then of course luck play a higher probability. Same for investing. Like if you're investing over a 3-month period, then luck plays a bigger bigger probability here. Yeah. They have bigger probability of affecting outcome. But if you're investing for, let's say, 20, 30 years or over a longer stretch, then the luck equation actually is very minute, very insignificant. Yeah.
I feel for as an outsider, there may be, at least in Asia Pacific, many cultures here, some like negative perception against poker, right? Because they think it's gambling.
Yeah.
But when you say chess, people think about strategic thinking a few steps ahead. What are some powerful skills that you get from professional poker?
Powerful skills. I think learning how to be patient.
Yeah.
Because sometimes like you want to wait for a better hand to play. So a beginner, someone who doesn't know how to play poker might play every single hand because they just want to be doing something. So same for investing. I think it translates very well. Like investing, sometimes we feel as an investor, we need to be doing something, either buying or selling, or at the very least looking at how the market is doing today. Yeah, but sometimes doing nothing could be the best thing. So having the patience, and that translates to discipline also. Because patience means you're waiting, right? Waiting for what? Waiting for to be dealt a good hand where your risk reward is very good. So you want to be sizing your bet higher. So same for investing, you don't want to be like, swing at every company that comes around. Every company is the next Tesla, that kind of thing. You want to be just waiting for that few selected companies that you want to place your bets on.
So true.
Yeah.
So many analogies here. So let's find out now. What's in your hand? Like what companies are in your investing portfolio today?
Like right now, right? Like so this year I'm in about 70% of my investing portfolio is in Tesla, and I have about 8 to 10% on Google, and maybe a 10% on like software companies, SaaS companies like Datadog, CrowdStrike, Cloudflare, and I'm holding about maybe 10% cash.
Okay.
Yeah.
10% cash. I'm hearing 90% US stocks,
Yes.
tech heavy.
Yeah, tech heavy. Yeah. So my investing approach is very, I would say, growth driven.
Yeah.
Yeah, because I feel like growth companies, they will have the most outsized returns over a longer period, and that's where I feel as a retail investor, that's where my edge is. Where I can, if I want to beat the market, right, I need to be investing in companies that are not good today, but will be good 5 years from now. Yeah.
What is your assessment? Because I'm noticing that Chinese stocks are not there. So what's your assessment for Chinese stocks on the risk and reward ratio for you?
To be honest, I feel like I can't do a I mean, I guess there's a gap here because I can't do a proper risk assessment because of the, I'm not sure what's the politically correct word, of like sometimes the CCP, they can just get themselves involved.
Yeah.
So there's a risk that I feel that I might not be that comfortable having in my portfolio lah. Yeah, but having said that, of course, if one wants to have a more diversified portfolio outside of the US, China is definitely a good sector. It's quite like discounted right now. Yeah.
So there's no China in there. There's a lot of US stock in 10% cash. So tell us a bit more about how this reflects your current investing philosophy, because it evolves over the years.
I guess I started as maybe over the last 10 years, I started as a local investor. So my very first company I invested was CapitaLand.
Yeah.
Yeah, because the Singaporean thinking would be like, hey, it's a local company backed by the government, property, you cannot fail. But also very hard to make money, to be honest. Like so we started as a frog in a well. Like for Singaporean, we always start with home ground, your DBS, your local bank, you can't go wrong there. Then you realize actually when you come out your frog, right, come out the well, you realize actually there's 世界那么大, there's a very big ocean out there. Then you realize actually Singapore is a very small market. So even if like you are a good company like Sheng Siong, it's very hard to grow because there's only so many neighborhoods in Singapore. But if you are going to the US, like Starbucks grow globally, right? Yeah. So I started looking at US companies, and then after a while, then I realized actually growth companies like Apple, Facebook, Google, these are the companies that are able to give outsized returns. So this is where my approach started to shift from Singapore to like international, I would say mostly US companies, and then after that going into like growth companies in the US sector.
Got it.
Yeah.
For critics who say that most of your portfolio is still US tech, is it too many, everything in one basket? What's your view on this?
I guess it really depends on one's individual comfortable level, I would say. So outside of my stocks portfolio, I also own a few properties. So for me, there's certain kind of diversification over there. I also own a bit of crypto also. So a bit of diversification outside of my investment portfolio. Yeah. As for, like how concentrated you are in US or like the whole portfolio in US sector, that really depends on one's individual comfort level. Yeah, I guess there's no right or wrong. Yeah.
This is something that's, I'll say, either you're a very early investor with a small portfolio, or this is like the expert difficulty, right? If intermediate, most people start, just buy a basket of S&P 500. That's pretty safe.
Yeah, actually, I would recommend that approach.
Yeah.
Like, I feel for the average investor, most of us are not investing to become a billionaire. To use the money to do great things, right? We just want to have our own financial freedom. We have money to spend for our retirement. And if that is the goal, right, then we need to have a plan that is suitable for the goal. So for example, using a fitness analogy, if I just want to, I'm not going for a bodybuilding competition. I'm just looking to maintain my fitness. I can just do the, top few compound exercises, keep things simple, and then I will probably do okay. So translating that fitness analogy to investing, if I just buy a few good ETFs, US, China combined, all the top companies are in there. I don't worry about the company earnings, the fundamentals, what Elon Musk say tomorrow, like as cost stock price move around. I'll just dollar cost average into some of the ETFs based on my own, timeline, and I'll do pretty well. I would like make an average of 8 to 10% every year. I think that's pretty decent for and comfortable and probably a return that's good enough for most Singaporeans also. Yeah, so why not that approach? And then the intangible side of it, which a lot of people don't consider, is if I take that approach, or if one take that approach, then like my stress level goes down a lot. I don't look at the charts. I don't have to wake up tomorrow and then worry my Tesla will drop like X percentage because of whatever reasons. And yeah, so that gives me the headspace to explore, do other things in life that I enjoy now. Yeah.
Yeah, that in itself, the peace of mind, is an intangible return that we don't think about. Like the externalities, like when you drive an ICE car, the petrol that goes into air near schools, near hospitals. That's something that isn't always costed in. Great point. So we now need to talk about EVs because 75% of Roy Ming's portfolio is Tesla. So a lot of recent news. This morning, we just had the shareholders meeting as well. Has your conviction on Tesla went up, stayed the same, or went down?
Haven't really dived into the AGM, but based on what I went through, I think it has probably grown up a bit, if not at the very least constant. So what I'm looking for, right, because since I'm already very much into Tesla, I'm already convinced Tesla is like, the company. So I'm looking out for news or happenings that tells me otherwise. That tells me that, okay, Tesla is it won't be overnight also, but maybe it's no longer making strategic long-term decisions. You have been like, making more decisions that is more optimized for the short term. Yeah. So far, it has been not doing that. It has been making plans that are longer term ahead, which I think is great. Like with the optimal stuff, FSD, I think it's still very strategic. Even with the recent decided to lower their car prices, right? And then some investors are not happy because margins are shrinking. And like if your next generation car is doing priced at 25,000, and right now the price is 50, 60,000, you cannot overnight those like drop, right? You need to slowly make your way down.
Yeah.
Yeah. So that's been the plan all along. Yeah. So far I think everything is okay, and my conviction has at the very least maintained the same, if not went up higher.
Okay.
Yeah.
It seems to be largely good things for long-term investors in this morning's shareholder meeting. We have Elon Musk saying that they will start investing on advertising, which is huge. They've got announcement on progress on Tesla board. You can see it's moving autonomously now. There are also updates that the next generation car, they're making not one, but two models, and Elon expects about 5 million units. And JB Straubel has been elected to the board of directors. Very popular, one of the early co-founders of Tesla, highly respected. The bad news, Cybertruck is not going to deliver in Q3, it'll be Q4. And I think people may be looking for news. Those who are looking for news on stock buybacks, nothing right now. Could wait a while more, even though Tesla is growing its cash pile. What are the red flags to watch out for Tesla? Like, what kind of news you see if it happens, you go, okay, this is a concern.
Well, off the top of my head, I can't think of any, but it will be around the nature of like they're optimizing for the short term, like short term profits. Recently they started to say like they're going to start trying out advertising, right?
Yes.
Not sure if that could be a tryout. But yeah, it will be along this nature of like optimizing for the short term over the long term. Yeah, which I don't see it that soon now. Yeah, I don't like over the last maybe 3 to 6 months. There's a lot of supposedly bad news, but I don't see any of it as like detrimental to the company. Like, so if I put myself in the company's shoes, like a part of the management, I do see like uh the decisions that Elon Musk and his management make. I think I align with that, like over for the long term growth of the company. Like if I'm not going to sell over the next 5, 10 years, like when you reduce your prices by a bit and then your margins shrink a bit, like to me it's not really a factor. Yeah. So no, none that I see so far.
I echo that. Right now, with a founder on board, Elon Musk, Tesla's decisions are still primarily mission-led versus revenue or profit led, to the disappointment of some institutional investors. But the irony is, mission led companies often become some of the most profitable, successful, and also most sustainable companies out there in the world, because great talent wants to work for a mission, not for profits. The best engineers apply to Tesla and SpaceX not because they want to build a better truck or a better sedan or a better SUV, but because they want to try to make the world a little bit better. And I think that's still a huge thing. I also feel that even one day, eventually, when Elon Musk steps down, as long as they got a good second in command, whether it's JB Straubel or Zach Kirkhorn, any one of the good lieutenants out there, there's still a good 10-year runway, like Tim Cook for Apple. In fact, the irony is the stock price may go up a lot more after Elon Musk steps down, because institutional investors love the
Maybe
stability
temporarily lah.
temporarily or sometimes long term. Tim Cook brought Apple's stock price up by 14 times.
But that was a different. So if I would look at that, right, I would say, Steve Jobs done a lot of the groundwork before he, unfortunately passed on.
Yeah.
So and then Tim Cook got the, I would say, relatively easy job of just steering the ship.
Yeah.
Because the groundwork is really late. Yeah. So I think that's what Elon Musk is doing right now. I think to touch on your point of like, Tesla and SpaceX got the best engineer. I think it's a self-fulfilling feedback loop, whereby if you are mission driven and then you are not optimizing for short term, that is where the best engineers will want to come work for your company, right? And because you have the best engineers to pick from, the best talent in the industry, in the world actually, and then you will have a better product. Your company is more efficient. Your company has better productivity, and so on and so forth. Yeah, that again creates even more revenue, which add to the bottom line of these so-called investors are what they want to see. Yeah.
I agree. How about the rest of your portfolio, the other 25%? Which companies have you had more conviction in? And are there any companies where your conviction is going down?
Maybe I use Google as an example. Like I mean, there's about a lot of chit chat about like Microsoft, the AI wars and all that. So I'm still waiting for Google to make their move. Like regard uh how it's going to unveil and how is it supposedly better or worse than GPT right now. And I'm still undecided. And a lot of people are saying like Google should have just released it earlier. Why are they keeping it secret? Why is it taking so long? Right? Perhaps one of the reasons is like the team decided to they want to wait for, like, sometimes the first mover, like using maybe Facebook, Friendster, or MySpace as example, the first mover might not have the best advantage eventually. So Google, for them, they are not in a rush. They can play the long term patient game if they know that they have a good product. For me, I'm still undecided.
Yeah.
I don't mind having more information on the how is the bar is going on. Yeah.
That resonates with me as an Apple investor. As you all know, Apple is rarely the first
Yeah.
to launch something. What's widely expected in WWDC next month is for Apple to launch their mixed reality AR VR glasses. They are among one of the last to do it already, huh?
Yeah.
But many people expect for this to be one of the first products that actually just works seamlessly. The reason why you don't see AR VR like walking down Zhongshan Mall where we're filming right now is because people just don't yet connect yet.
Yeah.
Before the AirPods, which when it was first launched, people say very ugly. Before the AirPods, there were far less good wireless chargers out there in the market. Today, any street in Singapore, you see AirPods. Any bus, any MRT, you see AirPods. People got used to it. So I think there is value in being patient and doing it really well. Anything else in your portfolio that you notice? Nowadays, people are talking about Palantir. It's in the news.
Yeah, we look at it. I mean, like the news among I guess the hoorah around retail investors is that Palantir maybe have turned a corner. They ran profitable, and I think the CEO said some strong statements about like maintaining the profitability. And I think everything is on track, right? Like their revenue is increasing. They got big contracts. Margins are, I think, getting better, or at least maintaining. For me, right, I feel like I can't close the knowledge gap and increase my conviction as an investor for Palantir because I don't use the product. So I think Palantir is still, to generalize it, right, it's more a B2B business. Their clientele are mostly big companies, US government and all that. Whereas you look at some of the biggest companies, they are mostly B2C.
Yes.
I use Apple products, I use Google, I use Amazon, Microsoft products, and not so much B2C. So because as a consumer, I don't get to enjoy Palantir services, like to find, where's the next terrorist or whatsoever. Like I cannot increase my conviction to really invest in it. That's me though. Yeah.
I have a follow-up question on this. You see whether there's a nuance there because you also invest in crypto.
Yeah.
And crypto is not something that we use daily as well. In fact, for a lot of us, we're still scratching our head. What does crypto do? So isn't a B2B company still easier to understand? Like there's a physical CEO, there's physical annual reports, there's shareholders, there's institutions there, compared to something like crypto where it's a lot more hard work for people who never got into it before. What's
That's
your take?
true. So I guess at the very least, Palantir got every quarter got some earnings and numbers to show you. Whereas for crypto, it's all very theory and very generic. I guess for crypto, for me at least, right, I'm just investing uh on an idea, on the theory that in the future the currency that we use might transit from fiat currency to a more decentralized medium. Yeah. So to me, it's like I guess it's more of a like a hedge against the fiat currency. Yeah. So can it be considered investment? Maybe, maybe not. And for me, it's a very small percentage of my portfolio. So it's more like a hedge against, like the fiat currency system failing, that kind of situation. Yeah. So for me, it's like that, lah. Yeah.
I also believe that skin in the game, whether how small, even if it's $1, it gives you more stake, more interest in it,
Yeah.
which also encourages the education, the learning
Right.
on that area, the topic,
Right.
whatever may happen to it. Even if it goes to zero, no harm done, no major
Right.
harm done.
Yeah. That's where I think maybe my poker background helped me a bit, like sizing my bets optimally. Like you can size it big or small, it depends on conviction and is it like for crypto it could be a long shot for me.
Yeah.
So if it's classified as a long shot, like it should be like a long shot sizing. That means it's like very small percentage. Yeah.
So right now, like when it's your turn to draw the cards, you got the cash this year. How are you using your cash? Are you keeping all cash? Are you spending some on stocks? Are you saving some for real estate, putting in CPF? Tell us more.
So I'm still undecided. This year, I mean, for the first few months of the year, I haven't, I mean, dollar cost averaging a bit, but I haven't really been, actively deploying. Um, and also I have been, my learning or my evolution as an investor, I've been learning more. This year, I've been reading up more about the macro stuff. Let me just share briefly, right? I feel like there's like three stages of investors, broadly speaking. Like maybe your first level one will be beginners who just started out with like don't know anything much about fundamentals, so just buying based on, the Daren say buy Tesla, that's why I buy Tesla, but I also don't know why I buy Tesla for. Buying based on friends' tips and also very easy to fall into FOMO or like uh fear of missing out, like FUD and all that. Yeah. So level two is where, the investors have been in the game for a while, they start to understand fundamentals, why we buy Tesla because of growth drivers, start to do a bit of qualitative aspect, put a valuation to it based on my Excel spreadsheet. Right, so fundamentals investors, they will be here about like 5 to 10 years, right, at the very least, right, have a good understanding of fundamentals. And then level three, a higher level will be where people look at the broader macro picture, like how the world is connected. That's where Ray Dalio talk about the world changing order, or like Howard Marks, he always talk about how the money supplies, interest rates, how everything is connected. So that's where I've been trying to read up a bit more and understand more at the broader picture. So from a broader picture perspective, right, to link back to your question, I feel like maybe this year is not the best year to be making any moves. Yeah. So I may just been holding cash and doing nothing in a way. Yeah.
Sometimes the best thing to do is to do nothing. How are you growing as an investor?
Growing as an investor.
Yeah.
So I'm reading out more. I'm reading out more like broad topics like history, philosophy, things that perhaps have nothing much like direct relation with investing per se, but actually is interconnected. Like what Charlie Munger always say, like broad disciplines are always comes back to investing. So, yeah. So understanding history also allow us like human nature. For example, if we learn history, we know that every empire will have ups and downs.
Yeah.
So for example, like US, it won't be too far fetched to say that it could be on the decline. And I need, as an investor, I need to look at the next 5, 10, 15 years. How will that affect my portfolio? Because I'm a primary investor in the US markets. Yeah. So I've been reading out a lot of like this broader scope kind of things.
Do you have one book recommend?
Uh, hmm. I think for the world changing order, Ray Dalio, he has this book. I think it's called the Changing World Order or something. You can find it online. I think it's quite a serious read, but I think you can get the summarized version. And there's a YouTube, I think, video about it also.
Best time to invest was 10 years ago. Second best time is now. Does this saying still hold true in 2023?
I think so. I think like when you say now, it's like because it's about getting started. If you have not been if one has not been investing, it's not suddenly you got $10 million to invest anyway. You're probably investing a small portion, right? At the start, it's about getting skin in the game, right? For example, in my first time going to gym, I don't have to go to gym 5 times a week or spend 2 hours in the gym every day. I just need to get started to see how it's helping me, how it's going. So getting skin in the game could be for beginners to get started. It could be as simple as putting a small portion of my savings every month to maybe dollar cost averaging into ETFs. That's a very good transition to getting started. Yeah. And to be honest, like if you get started today,
Yeah.
this month, over the next 6 months, even the market drop, it's not going to matter. It's very negligible to your finances anyway. So the downside is capped right now. Yeah. But it gives you the experience to, how are things getting started so that, maybe when the markets start to turn around and next cycles begin, you have the knowledge and experience to capitalize on it. Yeah, so that is a bit of intangible aspect that people don't consider because they always think, oh, yeah, I wait for the market to recover to then I start.
There was many of us, there was me too. Wait. Only when COVID came a few years ago, say, okay lah, no more time to procrastinate already. No more excuses. Let's do it. So the best time to start is still now. And the first step is always the hardest. Once you go through that initial inertia, there's a world of learning that's possible. And again, this is the path for you to transition from working for money, which you don't want to do for the rest of our life, to eventually money working for us. Ming, thank you so much for sharing your story from professional poker to investor, your experience, and also your evolution as an investor.
Yeah.
You can follow Ming on Instagram and also his Telegram channel, which you'll find down in the video description. So please join for top 5 poker tips. No. What do we get in the Telegram channel?
Sometimes I share about like investing stuff, just my own views on the companies that I invested in.
Yes.
And also sometimes I share about like earnings update, like company just released earnings, could be some popular company like Starbucks or Disney, and I share my own views about it.
That's great. So let us know what are your thoughts on today's video. What are things you agree with, you have questions on, you disagree with. Our goal is to hear from different perspectives. We'll continue to invite different guests to expand our mindset and grow as investors together. If you found this video useful, please click the like button. If you want to learn play poker, click subscribe. I don't know how to play poker. So just click subscribe to stay tuned to more videos on investing.